Welcome to Standard Chartered Money Insights, a podcast series by Standard Chartered Bank that brings you market views and insights on the go.
Hello everyone, my name is Abhilash and welcome to Cut to the Chase, the podcast where we focus on market events that truly matter. I want to start the new week by wishing our listeners, especially those in Asia, a very happy Chinese or Lunar New Year. As a sports enthusiast, I'm also looking forward to the commencement of Winter Olympics this week. Now, from a financial markets perspective, the biggest event last week undoubtedly was the more hawkish than expected Fed meeting. We saw most global equity markets across Europe and Asia end last week in the negative territory as markets increased their expectations of rate hikes even further. However, we saw US stocks stage a rebound in the Friday session to close marginally higher for the week on the back of some positive earnings surprises and weaker than expected employment cost increases, which may have dampened potential inflation concerns. In the week ahead, volatility in US stocks is likely to remain elevated, especially since over the weekend, a few Fed members expressed their renewed concerns around inflation, and Atlanta Fed President Bostic even called for a 0.5% or a 50 basis point rate hike in March. The other big focus for the markets will be Q4 earnings, as this week we have a number of heavyweights, including Google and Meta reporting this week. Since the start of the year, we've clearly seen technology sector stocks decline more sharply than the broader indices, given that they are perceived to be more sensitive to interest rate changes, at least in the short term. In our latest monthly publication, Global Market Outlook, which you can view on our LinkedIn Wealth Insights page, we have highlighted that earnings are likely to be a key driver for technology sector stocks, as we believe that oversold technicals and widespread pessimism may mean that we are due for at least a short-term rebound in the sector. From a technicals perspective, S&P 500 is trading just below its 200-day moving average, and it will be crucial to see if we can break above this key resistance in the coming week. The other big news over the weekend, of course, was the weaker manufacturing data in China, which was released on Sunday. So the official PMI index declined to 50.1, just above the 50 mark, which separates expansion from contractionary territory. On the other hand, the private Caixin PMI was at 49.1, which is clearly in contractionary territory. Now, while the data has weakened month on month, it is important to remember that from a seasonal perspective, we often see a production lull in January and February as a large number of factory workers head home during this period for Lunar New Year celebrations. So in the upcoming week, we will be watching out for two key events. First off, on Friday, the January non-farm payrolls or employment data will be released in US. And apart from jobs created, the overall unemployment rate is likely to be a key focus for the markets. Additionally, we have the ECB meeting and interest rate decision on Thursday. Now, before I end, I wanted to flag that given the Lunar New Year holidays, markets will be closed for the full week in China and on Tuesday and Wednesday in Singapore. Hence, we will return with the next episode of this podcast on Thursday. Now, if you enjoyed this podcast, please don't forget to rate and like it. Thank you so much for listening and wish you a very happy trading week ahead.
Thank you for listening to Standard Chartered Money Insights, a podcast series by Standard Chartered Bank. For more details on the latest market insights, subscribe to Standard Chartered Money Insights.